Hey, this is Sasha, and welcome to another episode of Let's Talk Stocks. Today we're going back to some technical analysis basics, and we're going to take a look at the head and shoulders reversal pattern. We'll take a look at what it looks like, the previous trend, volume, projections, entry point, and a few tips. Now, when we look at this pattern, typically I've seen this pattern be a little more bearish than really bullish, but there is an inverse head and shoulders pattern, which would be more of the bullish way or the bullish pattern where it goes to the upside, but I've seen it more in the bearish context. So let me show you what the bearish pattern looks like, because this one's a little more common. So this is a reversal pattern, so we're gonna roll it over. So it goes up like this. So let's say we have a stock moving. We create a little bit of one single peak here. Then what ends up happening is the stock pulls back, and then we'll create another bigger peak, and then finally a third peak, and over here this kind of creates a little bit of a neckline. Okay, this stock then breaks through, comes back, often retests, and then it'll go lower. So this is what the head and shoulders pattern looks like. So this is one shoulder over here, this is another shoulder, here is kind of your head right there. So that's why it's called kind of a head and shoulders pattern. Typically this first peak compared to the second peak is a little bit higher. And that's just because this shoulder can slouch a little, meaning buyers are not stepping in as much into this second peak. So what really is happening is you have this influx of buyers coming in initially. They say, hey, well, price is getting a little too high. So they go ahead and they start selling, and then other people get in due to the value, and that creates another influx or wave. But there's not enough of them, and when there's not enough of them, that stock again continues to pull back, and they recognize that, hey, this could be a topping out point. So on that next bounce, it may not reach those high peaks anymore, and that's why it then rolls over. We break that supporting neckline, which is your support level. We may come back and retest this and then further roll back over. So that's your kind of head and shoulders reversal pattern. If we take a look at the volume, oftentimes you'll get a good amount of volume initially as you start to head higher. And then as you start doing these pullbacks, the volume will slowly shift from being more strong during the upward movements or the bullish parts to it'll shift more into being stronger as you start selling off. Especially here, as you get into this breaking area, it's going to be stronger volume as you break that support. Okay, so watch for that strength on that break right there as well. Could be a little bit strong on the volume. And anytime you get these pullbacks, that should also continue to kind of increase. Otherwise, the volume could be a little more flat. You could also see things dry out a little bit because this is a distribution. But nevertheless, the key points really is you'll get high peak volume as you're going up. But then to change direction, you need that volume to slowly shift more to the bearish side. And that's why as you start these sell-offs and pullbacks, that volume should start to pick up. Your projection and kind of the goal of this pattern is, as far as the distance goes, is if you take from the head here, draw a line down to that neckline. So looking at it this way, you're going to do about the same on that from the neckline all the way down to this level. So your target will be about the same distance from the top of the head to the neckline. If we're looking for entry points, potential to get in, this of course is a shorting pattern, so you're going to short. You have a couple of opportunities here, but this will be entry point number one when it breaks kind of that neckline. If you miss that, you could take a look at entry number two, where you break and retest this resistance level now. In the past it was support, but then it becomes resistance where it rejects and then follows through. But again, this is for shorting the stock. So it's not for a bullish movement. So that's kind of the thing with these patterns. A little quick tip about this is just watch this second shoulder, whether you're doing a bullish or a bearish pattern. Watch the second shoulder, that sometimes it slouches a bit simply because you don't have enough movement on that second bounce. There's not enough volume maybe coming in or not enough buyers, so it may be a little bit smaller. Sometimes that neckline can also be a little bit angled, so you might see it a little bit sloped a little this way. So these bounces where they come in could be a little bit in a diagonal fashion as well. If we take a look at the bullish side, okay, so basically it looks very similar, except it's coming down from the higher prices. So what typically happens is, again, you'll get kind of your one peak or bounce, then you'll get kind of again another one. There's your head, okay, and then again there's your shoulder. Your neckline will be right about here, okay. So as that stock breaks out, you might see it retest. It'll kind of move something like that. So your head will be right here, okay, and these are your neck areas. And again, the distance, if we're looking at distance, you're just drawing kind of the distance between the head to the neck. And then again, you're looking for kind of your target right there. If you're looking for entry opportunities on the bullish side, of course, when it breaks, this is actually the more normal one people trade because this is looking for a long opportunity. So this could be your entry point. Another one is if it comes back and bounces, that could be your second entry point right there. So anyways, that's really the head and shoulders pattern. The bearish one I've seen is a lot more common. The bullish one, you know, you're basically going down and having a very strong pullback, and then it kind of reverses. In a way, sometimes this could also be a consolidation pattern. If you start looking at it, kind of a double bottom, triple bottom in a way, it starts to disguise itself. What you call it is up to you. It's just really the pattern. If the head is further down below a consolidation area, then it'll be a head and shoulders pattern. If they're more in alignment, it'll be kind of a triple bottom. That's just a name that we give it to easily reference and discuss these patterns. But overall, it's just a consolidation period where it gives the stock time and room to digest the sell-off, to be able to shift direction and reverse. Same thing in the bearish pattern. Here, you're moving to the upside, you're digesting, gives it time and room, and then it sells off further. So anyways, watch these patterns. You're just looking for areas of support, resistance, and sometimes if they break out above things, and you'll notice, hey, well, this stock broke out and you, let's say, tried to get in over here, but then it rolled back over and you lost out on that trade, then it may start to become a head and shoulders pattern because you tried to get in on it, but it went a little higher, and it's really, instead of a horizontal resistance area, it went above it because of that headline. And then again, you'll see how it evolves. So it's just a little clue and tip for you if you're getting into a trade and it just rolls over a little bit after that, it could actually turn into a head and shoulders pattern there. So I'd like to take a look at a couple of head and shoulders patterns here. This one we have is ATI, and I want you to put your attention towards the center of the chart here around March to July. We have one shoulder that's being created here on the left area right around March. Then around May, you have the head that's being created. And then you also have the other shoulder that's around July time frame right there. If you combine the two shoulders together, you get a little bit of a descending trend line there between the two shoulders. Your neckline, or kind of the support line, would be right under those armpits, and you can almost say that that's a triangle pattern, but it's not a triangle pattern because you have that head above there. Your entry opportunity would be just under or below that neckline, so going right under around the 56 level in July. That would be the shorting point. You can notice the volume also starting to build as we increase the selling pressure. Anyways, that's a head and shoulders pattern on ATI. Here's another head and shoulders pattern on Caterpillar, but it's inverted. So if we take a look at this one right here, the stock trend is going down. So again, this is a reversal pattern. And if we change direction, that's what the head and shoulders is going to do. So there's our head in 2009 around February, and then we have the other shoulder around June, July. This neckline is a little different. Again, it could also look like a triangle pattern, but because we have that head, it's not going to look that way. So the descending trend line is what you're watching for, which is that neckline. You're looking for it to break, and when that breaks, that would be your entry point right around that time frame. You'll also notice the volume slowly starting to build, okay, as we do the breakout. When we are in the head and shoulders pattern, the volume is declining a little bit. So anyways, that's a little bit of a head and shoulders pattern for you that you can also take a look at. All right, so thank you so much for joining me in this week's video. I hope you found it helpful. If you're listening on podcast, be sure to join us on video so you can really see what these patterns look like. And if you want to stick around and get other news and insights when we release new videos, then get on the newsletter list by clicking the link right here on video or in your description. Or if you just want to hang out on YouTube, then click the face image circle right below. Thanks again, and I'll see you next time.